community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to have Michael Moore of Moore Analytics as our guest. We had a little technical problem on Friday, so he's going to continue what he was going to talk to us about. If you'll remember, on January 5th, with oil at $72 a barrel, he said this is a buying opportunity in crude oil that you should take advantage of. And as you can see, it has been straight up, folks, since the 5th of January. Here we are on the 23rd, starting the year of the rabbit, the Chinese New Year yesterday. And so we're going to see what he has to say as he comes in at our break here, at the first break here in about 10 minutes. Now, some of the things that are happening here, let me just get this chart cleared up a little bit. I want to bring a new chart to you to show you one of the things that we were talking about a long time ago when we were looking at the dollar index. And if you'll notice here that we have the beautiful symmetry there, you can see this is not an ABCD, you see, because this is lower than that. That can't be an ABC, but this is a harmonic pattern because you have high here, low here, high here. So you have lower tops, lower bottoms. It's still in a long-term downtrend. As you can see, we've had a pretty good sell-off. We should be getting to some support here in a few days, but right now it looks like it could be off a little bit. Remember, this is a long-term chart, folks, going back well over 20 years. So that is something that you want. But we were looking at this, of course, at this level at 117, and that was when we were at 150 in the Japanese yen. So these patterns work all the time. Let's try that again, Larry. They work some of the time, but not all of the time. But let's look at one that we were watching with gold and silver. Here is actually it was gold that we were watching. We missed the fill in the gold market by $1. But let's take a look at this one. This is the chart, the weekly chart of silver, and we've been pointing out this 1-3-5 pattern. You see the lower tops right here? You have lower tops and lower bottoms, so that's technically in a downtrend for the last year and a half. Overall, it's still bullish because we have higher bottoms, okay, and higher tops. So right now, during the time frame that we're trying to define, this is a 1-3-5 pattern, stopping exactly, as you can see, at the 61% retracement. Well, if this works on a weekly chart, maybe it'll work on a smaller time frame. So what we're going to do now is we're going to take that same pattern and look at it on the hourly basis today. This was brought to our attention by a couple of our friends that follow this methodology, and I wanted to show you. There it is right there. There's the 1-3-5 pattern. For the 1-3-5 pattern to be perfect, and they usually are, the time distance between your head, 1, 3, and 5 should be equal. As you can see, they pretty much are. The ratio back should be a Fibonacci ratio of 618 or 786. If it's really bearish, it'll only go to a 382. But this one goes right to the 78% level of this high, 61% of this high, and look what happened. It dropped $2 a barrel, folks. That's a $10,000 move in $7,500 move in silver today alone. Gold didn't even do that. Gold just backed off from 1939. The sell was at 1940. We had an ABCD there, but we didn't get filled. It dropped $30, but nothing like what happened with the silver market. It just literally imploded. And not only that, but platinum went up while this was happening, as did copper. So each of these markets are acting, with their own vibration. So that's what you have to do. You got to play the game that they bring you. Now, I wanted to share with you a couple of charts here that are interesting. This first one right here is the bear market in Treasury bonds as defined here by the, hold on one second here, by the, hold on one second as we get this up here, as defined by the Elliott wave, folks, you can see here this market has been going down for quite some time. You notice this trend line that they drew right here where it broke above that? That is that valid trend line concept that I talked about last week. You notice how these highs all match up? That's what you want to be watching. So that's the main thing of something that we want to pay close attention to. Okay, now there's another one here in that same realm of the Elliott wave, folks, and it's in the stock market. This is the S&P 500, and this is the one that was, very troubling because, we really thought that we had the handle on this, and we did. We made 70 points on the way down, but we gave 10 points back on Friday. But look, this is a perfect, valid trend line system, and this is, going over a long period of time. Look at this trend line coming down here, folks. We're gonna take that out today. We're going to knock that out pretty closely, about 40, 60. That's going to take that out. And you ought to be careful on that one, because if you break that valid trend line to the upside, that means you've got an A, B, C, D to the upside, way up in this area right here. So that's why you can't be too bullish. And when those markets explode like they do, you just can't stand in front of it. You can have a bearish idea, but if the bearish idea isn't working, it's just not worth it, folks. It really isn't. It's just too difficult to even try to figure that out. It's just no way to do it. The other one that we were looking at today is we talked about that trade in the euro on Friday up at that 109 and change level. It's broken about $600 in our favor, so that one's working pretty nicely. But, like I said with the stock market, if you get stopped out on Friday, stand aside. And when you saw the market Sunday night that went absolutely flat for 6 hours, 8 hours actually, it went just flat. The Dow wouldn't move 50 points on either side of that all night long, and the S&P I think moved 8 or 9 points on either side. There was absolutely no selling up there, and that meant that there was a lot of accumulation. And by golly, you can see accumulation occurred once it broke out of the high at 39.91. It was off to the races, and we're looking for higher prices now. So just get ready. When we see a pattern that tells us that this market's ready to go lower, we're going to be there. But right now, you just can't stand in front of it. But pay attention to one other market that's definitely on the list. Oh dear, what happened here? I lost. Oh, this is not good. What are they doing to me here? Just a second here. I hope they can fix this. I don't know. Oh boy, all my charts have disappeared This is not good, folks. All my futures charts have disappeared, well, maybe I can get this other one fixed up. No, I can't. Let's get this out of the way here, because I wanted to share with you natural gas, folks. Take a really close look on natural gas, because it's lined up. It made a big gap up today of about 40, almost 50 handles. Let's say 45 handles, and we pull back right to a 61% retracement, still up on the day. So as long as we don't take out that low at 30.05, I think we got a chance here that natural gas will finally be turning. So that's one thing that we also want to be watching for sure. That's pretty good. That makes that. I don't know what happened to. There it is. I've got it right here. Let's go here and take a look at this natural gas, because I think we got a really good chance at that bottom has come in. We alerted you on the video this morning that if you got a ABCD pullback at the 382 or 618, take it. And so far it's held up. Whether it will or not, I don't know, but the risk now is just basically break even. So that's what we're watching here in the natural gas. We're going to be taking a break here, and we come back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I believe we have Mike Moore on the line for More Analytics. Mike, are you there?
Yes, how are you?
I am good. Are you able to put the charts into the TFNN program to show what the folks are looking at?
I was informed by Jacob that it's best to stay on Skype today. But we've cleared everything else off the peripheral. So
okay,
hopefully we
just
won't
put
have
them
any
on
issues
Skype.
today.
Will be just fine. Skype
Okay.
will work out okay.
All
Mike,
right.
you made a prediction back on January 5th that crude oil was going to go up, and it's been up just about every day since that time. What are you seeing in that complex now?
All right, we'll jump into crude first. So this is when we talked back here on the 5th, and we had just made a corrective move against the move up, and I said that if we held this area, can you see my screen okay?
Yes,
Okay. This could start a whole new bull structure, which we've seen. Let's pull the currency up, which we've seen here to the tune of about 10 grand. And we're not quite finished yet. Still got to take these highs out, and then we may reach up to some exhaustion levels here, or if we peak above this and fail back down through it or settle back down through it, then we could see a bearish correction. And I believe when we'd gotten off the phone that day, one of the other things I said was that the heating oil crack, we were talking about the importance of understanding what the spreads are doing. Because if you understand that importance, you understand whether or not you want to be long the crude or whether or not you want to be long one of the products instead of the crude. And you can see here I had said that we just completed this move down in the heat crack, and this was a good time to be long because we were either going to start a bullish correction against the move down or a whole new bull structure. And so you can see in the ensuing days, if you had been long the heating oil instead of the crude, you would have made $15,000 more per lot.
Wow.
Being long the heating oil than you would have being long the crude. So that's real power in there. I mean, even in just these days, as I was explaining on the last phone call, just in the ensuing days, it was a difference of 10 grand, and that was That was 4 full ADRs of the crude in just a few days. So it's really powerful. And right now, actually, I have some major projections to the upside that are being really fueled by the unleaded gasoline and the heating oil. So the unleaded gas broke above this formation here, which I said would bring, let me pull this up here. Can you see my Word doc on here?
Yes, I believe we can. Uh-huh.
So, I mean, we've been bullish in the gas from down in here, obviously. It started a whole new bull structure. But, and you can see also just if I measure the equity there, you know, you're talking about 20 grand instead of 10 grand. That's just in the gas crack. But here they trade above, bear with me 1 second. They trade above 248.56, projects this upward 23 cents minimum, 61 cents plus maximum. If you wanted to translate that into crude dollars, you would just times either one of those by 0.42, and you would get the equivalent of what the crude move would be. But a 61 cent max would be, you know, sort of the equivalent of around a $25 crude move. And so far, we are, you know, about 8 grand, 9 grand into that. So big projections in here to the upside. The heating oil also has large projections to the upside from here. Now, we've just started this. We've held an exhaustion a little bit here, but this has significant projections to the upside as well, to the tune of 48 cents minimum, 72 cents plus maximum. And just keep in mind that 72 cents, all you got to do is bring up 72 times 0.42. That would be the equivalent of a $30 crude move to the upside.
Yeah, that's a big move. Well, I'll tell you one thing. They forgot about global warming here in Tucson. It was 21 degrees here. Second coldest day ever.
Well, you know, the funny thing about technicals is they get you in on the move before the fundamentals present themselves to you, even though the fundamentals are the ones that are driving the market or news-based events. Now, if either one of these big formations fail and this closes down below them decently, then the market's really going to get whacked to the downside, probably for days / weeks.
Okay.
And just to switch over, I know some of you are interested in the natural gas. The natural gas side said that this break below this formation up in here would project this downward. That came in at, let me just pull it up. At 499.30 would project this downward, $2.27 minimum, $4.77 plus maximum. We attained $2.11 of that and before these are being put on hold. Now, one thing I would note is that if you can see this red box in here, this is the last final exhaustion area of a corrective move against here. So if this gets washed out and we start trading or settling down below here, this whole thing should keep washing out towards the, $1.51 area. Yeah. But if it doesn't and we hold here, this could be just like what I showed you in the crude oil before in the products. This here could be for natural a whole new bull structure to the upside, but this would be a much more significant bull structure to the upside. So bears from up in here and just holding kind of pause at this point right now. And then on the lower time frame charts, you can see we've come down here and these lows are shallowing out right here, right? And the highs they're losing their momentum. And this is giving you a warning that the likelihood of this starting to build a base here or popping is a little bit stronger. We held this exhaustion level down here twice, and then we popped up here Friday night. I said the break above this line would even further project it up to the next one, which we held and rolled over a bit. But if we take this formation, it's not a big formation. It only projects it upward another 450 ticks above it. But that could be the catalyst for something larger, given that we're holding these lower time frame exhaustion levels and we're holding a much bigger time frame exhaustion level both at the same time.
Now, Mike, when you're doing all this, you're doing this all on technicals. I haven't heard you mention one thing about fundamentals, which is great, but that's what you do, right? You call it more analytics because that's what you do.
Yes, sir. The reason being is my start is from literally in the trading pits of the New York Mercantile Exchange. Mm-hmm. And traders down there do not have the time. Well, the time frame of calls was too short down there for any fundamental news to make any sense. If it's a news-based event, it's one thing. But fundamentals, like, you're not going to make a trading decision to hold a position for 50 ticks based off of fundamentals. It's just not going to happen. The technicals are specific enough that they can get you in and out. You know what your risk is. You know what your reward is. And then I got more adept at making much more significant projective calls over time. And, then guys off the floor and options traders keyed in a lot more on those higher time frame trades.
Okay, we got to pay a few bills. So we'll be right back with Mike Moore of More Analytics, folks, and he's going to be talking to us about his auto trading program that might be available to some of you. So stay tuned. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're chatting with Mike Moore of More Analytics. And what's next on the menu, Mike?
Can you still see my screens, or?
Yes, it's all coming in perfectly. We can see you drawing the pictures and the whole bit. It's a big 10-4.
Okay, so just as a recap in the S&Ps, basically we've been in a large bearish correction or trend against the main move up. And I think it's more corrective in nature. What I mean by corrective in nature, meaning I think that this is going to resume to the upside. So right down in here, we held exhaustion down below, and that was That's right. And the top of the analysis, I said I warned of possible exhaustion at the 35.31 to 35.04 area, which had the potential to trigger a bullish correction with a minimum target of 37.93. So we held 35.02. We rallied. We took out 37.93. And then I was looking for a higher time frame target of 41.90.5. We came just shy of that with the 41.80 high. This should not say this morning. Sorry, I got to take that out of there. It's been in there for a while. But then I said if we held the 41.80 high, it would likely start a bearish correction to exceed 224 handles from the high. You saw 391.5 of that. And then those have been on hold now because on a lower time frame, so that was, we reached the lower time frame target. We just came shy of the higher time frame target. And now I'm going to drop this down to a 60-minute chart. Then we failed below a major formation up here, which I said should bring in heavy pressure for days/weeks. And then we came just shy of this exhaustion level here. And then when we were talking last time, I said that this looks like it is building a small base to then launch a new bull structure to the upside, similar to what we were talking about in crude oil. We took out this line here and this line, and that's projected this higher. And then we held a lower time frame exhaustion here, rolled over, and then we've taken off again. So, you got that?
Oh, it's just scam the Republican Party asking for money. I quit giving it to them, so they're on my case.
Okay.
Sorry.
That's all right. Anyway, yesterday I said that the trade above 3943.75 negated a bearish reversal above and warned of renewed strength, likely to take out 4035.25. So we just saw that today. Just took out those highs there at 4035.25. But my feeling is this is now in the last stretch of the move from the lows up, with exhaustion right up here in this rectangle. And if we take that out, maybe higher levels of exhaustion. If this rolls over from here and settles back down through these highs, that's going to warn of a bearish correction. And that bearish correction from whatever the peak there would be about 134 handles, which would be healthy. If we corrected down that way and held, then that could set us up for a whole new bull structure again to launch to the upside. So we'll have to see how that plays out. Do you want me to go over the gold quick?
Yes, please. No, take your time. We got plenty of time. No, this is very interesting, and you're getting thumbs up everywhere. So this is what we like to see.
Oh, great. Well, just telling you right now, if we fail back down through these highs here, that could be a low risk short. And again, you'd be looking for about 134 handles from whatever the high is. So that would be down in here. We happen to have held this trend line I had here yesterday perfectly on the downside. If we take that out, then things can start looking uglier on the downside, and then we could see a much deeper press down, even if we took this one out as well. But that's a ways away. So the gold, took out every semblance of bearish trend when we took these lines out. Basically, you can draw them a couple different ways anyway, but I had a bullish reversal right here on this day, started getting long in here, and multiple levels of getting long, and that is talked about right here. Hold on. So the trade from 1641 has brought in 297.8 of strength. Some other bullish projections in here, but I also said that's a solid trade above 1679.5, put this above a major formation. So we were projected upward $80 minimum. We've seen 259 of that so far. But basically, we've been trucking upwards. And if you see on a higher time frame, let me pull it back up here. We went over this a little bit last week. Is this whole structure here from November of 2015, we were in a base here, but this started this whole new bull structure. And I think that this is probably going to be the final leg up. Probably going to go up, take out these highs, and then maybe extend higher to look for some exhaustion levels before having an even larger bearish correction. But also in this whole structure here, there is a significant bullish pattern right here that could really propel this a lot higher up into these upper levels before holding exhaustion and then rolling over. So, I would be looking for opportunities on pullbacks and whatever else to start adding on to positions and, paying for your position, letting it roll out, paying for your position, letting it roll out. And just currently on a lower time frame basis, we had gone up and we'd failed back down through this bearish formation, came off a bit, and now we've rallied a little bit right here. So kind of tentative. If we come off and take out some of these other lower formations, it'll come off even harder. And we could use a pullback, frankly, because we haven't seen any significant pullback like this in a while. So at some point, we're going to see that. And really what you want to be looking for when you see that kind of a pullback is one of four things. You want to be looking for a short-term bullish reversal. You want to be looking for an exhaustion level holding. You want to be looking for a bearish formation that we broke below to be violated back on the upside. Or you want to look for a descending bullish formation to break above. Those are typically the four main things that are going to start the juggernaut of a reversal then back to the upside. And then you can sort of layer in as you get added signals back to the upside.
Okay, Mike, I have a question.
Yeah.
Someone's asking, are you person's asking, are you a student of Richard Wyckoff?
To some degree. I've studied a number of different disciplines. It's hard to even remember half the disciplines I've studied over the years.
I know that feeling.
The thing with technical analysis, honestly, I think the real key to it is some people look at technical analysis as though it has to be a system that works all the time under every condition. And the reality is and not to sound vague, but technical analysis really works best when it's taken into consideration with a couple of other factors, And a novice will simply look at, a novice will look at something like this. He'll look at, stochastics, and they're crossing over and they're overbought. I need to sell it up here without taking into consideration what is the underlying trend. Are we in a sideways market or are we trending higher? And things like
Mike,
that.
We got to pay a few bills here. We'll be right back for another segment with Mike Moore of Moore Analytics. Stay with us, folks. Really interesting stuff.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back with Mike Moore, More Analytics. Please continue, my friend. It's great stuff. We really love it.
Oh, thank you. I appreciate it. It's an honor to be on your show.
It's an honor to have you.
Thank you. I just want to take just a second to take a side note here for a second. I know a lot of you listening and watching this right now are guys that are good traders, been traders for years. Some of you guys are new traders. Some of you guys are trying to figure out how to analyze the market yourselves. And one thing I would just say is, because a lot of people have pride and they say, well, I want to know how to analyze the market myself. I want to know how it works and all this. And that's fine. I think that everybody should understand on some level, basic levels of technical analysis. But if your pride is getting in there and saying, I got to figure this all out for yourself, what you're really doing is you're basically telling yourself you are going to spend a lot of your time analyzing the market and then having to trade the market on top of all that analysis. And so, one thing I would just say is that, I get up in the morning at 3:30 in the morning and I start analyzing the markets at 4:30, and I'm analyzing the market straight through to 8:30, 9 o'clock sometimes. And then I'm doing post-market synopsis in the afternoon for another hour and a half, 2 hours. So I'm spending 5.5 hours basically analyzing the markets. And so you got to ask yourself, what is my time worth? Because I think that time is the greatest commodity that there is, period. And anybody that has kids and a wife that they have to spend time with knows that. So I would just say, if you find an analyst like me or the guys running the station or whoever else, or even find a couple analysts that are consistent, that's something that saves you money. Yeah, it costs money, but it saves you time. And if that performance is consistent, that money paid and time saved is well worth it, because if the signals even you only care about two ratios. Number one, how often is the person correct? And number two, how much do you make on average versus how much do you risk? And if those line up, anything that you pay for that analysis, you should be making exponentially what you're paying for the analysis. So it should be an asset that pays for itself, not an expense. Anyway, that's just my plug. But a lot of people, they don't understand. They think, I got to figure it out on my own. I don't want to pay somebody else. I'm like, that's ridiculous. It's the guys down in the trading pitch in the New York Mercantile Exchange, they didn't sit there belaboring that fact. They just said, hey, your stuff works. I'll pay you for it. Boom, I'm going to trade. I'll trade whatever I trade on. But I just want to give you a quick example. Yeah. What's that?
This would be a good time to tell them you've got a auto trading system that puts your orders in for everybody, don't you?
I do. Let me just
Why
share
don't you
one
tell the
quick
folks
thing
what
with-
that's about?
Okay. So we have 2 auto trade programs. They're not live yet, but we're starting to collect information from investors that are interested. That is going to be, here's my plug, on the More Analytics website. And there's going to be 2 programs. One's going to be a bracket program. That's going to be a shorter term program that has multiple trades per day in the energies, and then probably the S&P and gold. And then there is a higher time frame, purely automated system. It's overseen, obviously, by Human Insight, that is more longer term in nature. So you can look for those on there. I wanted to just share one other thing with you real quick. This is an example right here of how, like, understanding the interplay of the spreads makes a difference. So this positive sign right there by heating oil, the equal sign right here by the RBOB, and the negative sign by crude. What does that mean? This was a weighting that I put out to my clients on Friday that said that basically today the heat should be the strongest relative to the RBOB and the crude, and the crude should be the weakest out of the 3. So it sets up the hierarchy that heat should be the strongest, RBOB should be in the middle, and crude should be the laggard. And if you look here at this quote board today, you can see that the heat is up 673 ticks. The RBOB, which is in the middle, is up 500 ticks, and the crude is up only 39 ticks.
Yeah, well, that's a huge amount. My goodness.
Just to show the difference of what those insights can mean. And you may not even be thinking about looking at all these other spreads, but if you have somebody else taking care of that for you and giving you that insight, that's the kind of edge there. It's not a small edge, it's a major edge. If you're trading crude oil and you don't know what's going on in the unleaded gasoline and the heating oil, I mean, it's a massive thing to be missing. So anyway, did you want me to go over the Bitcoin quick too?
Yes, please do. Yeah, we have folks here that like crypto stuff. I happen to like it. I don't trade it, but I like to watch it. It's like football. Okay. I don't play football, but I like to watch it.
So the Bitcoin here has obviously been in a long-term bear slide, except for recently. And I said the rollover in November 10th of 2021 put this into a bearish trend. I warned the sell-off should exceed 13,000 a coin from the 69,355 high, and we've seen 54,430 of this. And what do I mean by something like that? If I said 13,000, but I'm still talking about 54,000, that means, like, when somebody looks at this, they say, "Wow, this is a lot of writing." But the fact of the matter is, this is keeping track of different calls that were made along the way that I remained in a bearish bias with, right? So I said should exceed 13,000. It went on to attain 54,430. And then there were these other things. And then it says these are on hold. So what does that mean? It means that you don't even have to read all this stuff on any given day until this says off hold, because these are place setters, as though you were trading it from a hedge fund perspective on a higher time frame. Get short up here, short up here, short up here, boom, put it on hold. Short here, short here. And then you have the lower time frame calls also. So for example, here, the trade below 34,830 a coin. Put this below a significant bearish formation that projected this downward 13,000 minimum, 35,000 plus maximum. Now, how could you possibly get 35,000 to the downside if you're trading 34,830? Well, the coins could go negative. And I'm not saying we're going to see all that much, but we see 19,905 of that.
How could they go negative?
Well, how could crude oil go negative $40 a barrel?
Yeah, well, that's
right.
You ask a silly question, you get an answer that makes sense. You're right. I better shut up and listen. Go ahead, my friend.
Well, no, it's a good question. It's a good question. You know what? It was the very question that all of us that have been trading crude oil for years were asking ourselves before it went negative 40. And it may sound ridiculous to you, but there is, I think I said when it was trading 43, I had a projection to the downside of $26 minimum, $34 plus max. And I got a lot of flack from people that said, we're not going to come off to $8 a barrel. That's ridiculous. You have to go to a commercial. I can hear it in the back.
No. That commercial's not ready yet. Oh, yes, we are now. Yeah, we can. Stay tuned, folks. Mike Moore, more analytics. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks, and we're speaking with Mike Moore, More Analytics. Mike, we've got about a 2-minute segment here, and I'd like for you to do something for us here at TFNN, especially me. I'm going to have you on every 2 weeks, but if you see something that you would like to share with us on a cameo appearance of a couple minutes or 3-4 minutes, whatever you need, you just let me know, and I'll get you on the show so that the folks can see live what you're doing, much like what you did on January 5th when you predicted the bottom in the crude oil market at $72 a barrel. So please do that. Now tell the folks what's the best way for the folks to reach you.
Okay. Best way to reach me is come to the website, go to moreanalytics.com. And if you're interested in the auto trade program, there's a link there also that you can put in your information that we're collecting. Or you can sign up for whatever newsletters you want or a combination of them. I don't really call it a newsletter. They're just it's a trading tool. But that's the best way to reach me.
Okay, that's really good. Now, I have one other question. How long have you been doing this? It's been like 30 years or something, isn't it? Pretty close to that?
Yep, exactly.
Wow, that's very good. That's really good.
I was that quintessential guy that you see in the movies. I was the last one on the trading floor when they used to come in with rakes and they would rake all the paper up trading kits. I was the last guy there, for years, just learning how to do the markets.
Yeah, at the Merc they had this giant vacuum cleaner. And the guys that were doing the vacuum cleaner, they actually had a screen in front of it to check to see that there was no money, because there was money, shouldn't have been money on the floor all the time, but there was always money floating around there. And these guys would pick it up, through the screen, because they could see the different color between the white paper and also the green bills. And so it was really funny, but they did it every day. So there was money involved. Hey, listen, thanks for joining us, my friend. And we're going to have you back again. More analytics, folks. Steve Moore, that's my other buddy. Anyway, Mike Moore, More Analytics, and we'll have you on again soon. Okay, friend?
And I just want to say thank you to all the viewers. It's a pleasure and an honor to share this with all of you. And like I said, time is the greatest commodity, and I appreciate your time. Thank you very much.
We appreciate you. Good. God bless. Okay, folks, live every day in an attitude of gratitude, and may God bless, and we'll see you on the flip side tomorrow. God willing.